Welcome to a deep dive into the future of finance. Today, we're exploring the AI revolution, specifically how machine learning is reshaping stock market predictions in 2025. Artificial intelligence is no longer just a buzzword. It's a transformative force in the financial world. From Wall Street to individual investors, AI is changing the game. In this video, we'll unpack how machine learning algorithms work. We'll look at their role in predictive analytics, and we'll explore breakthroughs making AI more accessible. Like the cheaper AI models from companies such as Ant Group, by the end, you'll understand why 2025 is a pivotal year. So, let's get started with the basics. The stock market is a complex system. It's driven by countless factors: economic data, corporate earnings, global events, and investor sentiment. Predicting its movements has always been a challenge. Historically, traders relied on two main methods: fundamental analysis and technical analysis. Fundamental analysis looks at a company's intrinsic value. It examines financial statements, revenue, and assets. Technical analysis, on the other hand, studies price patterns. It uses charts and historical data to predict trends. Both methods have their strengths, but they also have limitations. They can't always account for sudden market shifts or the impact of breaking news. This is where artificial intelligence steps in. AI, particularly machine learning, is revolutionizing predictions. Machine learning is a subset of AI. It allows computers to learn from data without being explicitly programmed. In the stock market, this is a game changer. Machine learning models can process vast datasets, far more than any human could handle. They analyze historical prices, trading volumes, and more. They even incorporate real-time data, like news articles and social media sentiment. This gives them a holistic view of the market. Let's break down how these models work. Machine learning models are trained on historical data. They identify patterns and relationships. For example, how a stock reacts to certain events. Once trained, they can make predictions. These predictions get better over time as the models learn from new data. There are several types of machine learning models used. One popular type is supervised learning. In supervised learning, the model is given labeled data, for instance, past stock prices and their outcomes. It learns to map inputs to outputs. Another type is unsupervised learning. Here, the model finds patterns without labeled data. It's useful for discovering hidden trends. Reinforcement learning is also gaining traction. In this approach, the model learns by trial and error. It's often used in algorithmic trading, where the model adjusts strategies based on rewards. These models are powered by advanced algorithms, like random forest and support vector machines. But the real stars are neural networks. Neural networks mimic the human brain. They process data through layers of interconnected nodes. Deep learning, a subset of neural networks, is especially powerful. It uses multiple layers to analyze complex patterns. One type of deep learning model is particularly effective. It's called long short-term memory, or LSTM. LSTM models are great for time series data, like stock prices that change over time. They can remember long-term trends, while also capturing short-term fluctuations. This makes them ideal for stock market predictions. Another powerful model is the gated recurrent unit, or GRU. GRU are similar to LSTM but simpler. They're faster and still highly accurate. These models are transforming how traders operate. They enable high-frequency trading, where thousands of trades happen in seconds. They also improve portfolio management by optimizing asset allocation. But it's not just about numbers. AI is also tapping into human behavior. This is where sentiment analysis comes in. Sentiment analysis uses natural language processing. It analyzes text from news, social media, and reports. It gauges whether the sentiment is positive or negative. For example, a tweet about a company's earnings could sway investor confidence. AI can process millions of such texts in real time. This helps predict market reactions. Combining sentiment analysis with historical data creates a more accurate predictive model. Now, let's talk about the breakthroughs in 2025. AI models are becoming more efficient and more affordable. This is a big deal for the financial industry. One company leading the charge is Ant Group. Ant Group is known for its fintech innovations. They've developed cheaper AI models. These models reduce the cost of training, making AI accessible to smaller firms. This democratization of AI is huge. It levels the playing field. Now, smaller hedge funds can compete with giants. Ant Group's models are also highly scalable. They can handle massive datasets without requiring expensive hardware. This is critical for real-time trading, where speed and accuracy are everything. Another breakthrough is in model transparency. In the past, AI models were like black boxes. They made predictions, but no one knew how. Now, explainable AI is changing that. Explainable AI provides insights into its decisions. This builds trust among traders and helps meet regulatory requirements. Speaking of regulations, let's address the landscape. In 2025, AI in finance is under scrutiny. Governments are concerned about fairness. They want to ensure AI doesn't manipulate markets. The European Union has strict AI regulations, like the AI Act passed in 2024. Despite these challenges, AI adoption is soaring. The AI-based stock prediction market is booming. It's projected to reach $7.3 billion in 2024, with a growth rate of nearly 33%. This growth is driven by demand for accuracy. Investors want an edge in volatile markets. AI provides that edge. Let's look at some real-world examples. Goldman Sachs is a pioneer in AI trading. They use an AI platform called Kensho. Kensho predicts market trends using big data. It analyzes news, earnings, and market movements. This helps automate trading decisions. Another example is I Know First, a financial services firm using AI algorithms. Their models forecast stock prices with high accuracy. They've reported up to 97% accuracy for S&P 500 and Nasdaq predictions. These examples show AI's potential, but there are challenges to address. One major challenge is data complexity. Financial data is noisy and volatile. Models can struggle to filter out irrelevant information. Another issue is overfitting. This happens when a model is too tailored to past data. It fails to generalize to new situations. There's also the risk of market manipulation. AI can detect fraudulent trading patterns, but bad actors could also exploit AI to create misleading signals. Despite these hurdles, the benefits are undeniable. AI is making predictions faster and more precise. It's empowering traders and investors. Let's explore how AI is impacting investors. For individual investors, AI is a game changer. Platforms like Zerodha and Upstocks use AI. They analyze trading patterns and preferences. This helps tailor investment strategies. Retail investors can now access tools that were once exclusive to professionals. AI also helps manage risk by analyzing market trends and volatility. It can suggest when to buy or sell. This reduces emotional decision-making, which often leads to losses. For institutional investors, the impact is even bigger. Hedge funds use AI for portfolio optimization. They balance risk and reward with precision. AI also detects anomalies in trading, helping prevent fraud and manipulation. But what about the future? Where is AI in stock trading headed? In 2025, we expect several trends. First, AI agents will become more autonomous. These are systems that act independently. They can execute trades without human input. This is already happening on a small scale, but it will expand significantly. Second, multimodal AI will gain traction. These models process more than just text. They analyze images, audio, and video. Imagine AI analyzing a CEO's body language during an earnings call to predict stock moves. Third, AI will integrate with other technologies, like blockchain for secure trading. This will enhance transparency and trust. Finally, AI will become more personalized. It will cater to individual investor goals, whether you're a risk taker or conservative. AI will tailor strategies to your needs. These trends point to a bright future. But there's a catch. AI is not a crystal ball. The stock market is inherently unpredictable. No model can guarantee success. Human intuition still plays a role. The best results come from combining AI and human insight. This hybrid approach is gaining popularity. It leverages AI's speed and human judgment. So, what does this mean for you? If you're an investor, Now is the time to explore AI tools. Platforms like Robinhood and eToro are integrating AI. They offer insights based on machine learning, but always do your own research. AI is a tool, not a magic wand. For traders, AI can enhance your strategies. Consider using AI for technical analysis or to monitor market sentiment, but stay aware of the risks. Over-reliance on AI can lead to losses. For financial firms, investing in AI is critical. It's a competitive advantage. Firms that adopt AI will stay ahead. Those that don't may fall behind. Let's wrap up with some key takeaways. AI is redefining stock market predictions. Machine learning processes vast datasets. It uncovers patterns humans can't see. Breakthroughs like Ant Group's models are making AI more affordable and scalable. This is empowering everyone, from retail investors to Wall Street, but challenges like data complexity remain, and human oversight is still essential. The future of AI in finance is exciting. It promises more accuracy and accessibility, but it also demands responsibility. As we move forward, balance is key. Embrace AI, but stay informed. That's all for today. Thanks for joining me on this journey. If you found this video helpful, please like and subscribe. Share your thoughts in the comments below, and I'll see you in the next one.